Welcome to Build to Scale, the business series. Today's topic covered money in, money out, mastering your business cash flow. In this workshop, you will learn how to take control of the money moving through your business. So you're not just making sale, you're keeping profit. We'll simply cash flow concept and give you practical tools you can start using right away. Um, Hi, this is Irene Cho, and I'm your host today. This webinar is brought to you in partnership with EWDD, BusinessSource Pico-Union Westlake Region, operated by PACE Business Development Center. This webinar will be recorded and you may find it on our website, e-library, after a week or two. Just a little housekeeping before we get started. Please mute yourself during the webinar. If you have a question, use the chat box or raising emoji, hand emoji, or using chat box and then write the question, please. And then Valerie will answer um, at the end or time to time while she present. Okay, now let's get started on today's webinar. Please welcome Valerie.
I don't hear any clapping. No, I'm kidding. Hi, good afternoon, everyone. My name is Valerie Rivas, and thank you so much, Irene Cho, and also Pace, for your continued partnership and following in my entrepreneurial journey. And thank you for everybody being here. While I am giving my, thank you, Charlene, for clapping. Love it already. If you could please let me know, I see that Charlene is in manufacturing, and I just kind of want to get an idea of who we have here. That way, if I have some sort of examples that maybe I can relate to your industry, it'll be a little bit more meaningful. And then also maybe answer certain questions for you throughout the presentation. So thank you again, everybody, for joining. You could be everywhere else, but you're investing in yourself and in your business. So thank you for all joining here today during lunch hour. Now, a little bit about who I am. So that way you know who is speaking to you. And this is not switching. All right, wanted to make sure it's not going to switch on me again. Okay, so who am I? I'm Valerie Rivas again, and I'm the CEO and founder of Evia. And I've been with business finance for over 20 years. And for the last 15 years, I work with business owners across the country and also ended up founding Avia. And before this, I was actually working at a bank for the last over 10 years. And when I founded Evia, I wanted to be able to be a growth partner beyond to what banking solutions had to offer. So when I was in banking, pretty much I could really only offer a business account, loans, lines of credit, credit cards. I wasn't able to do more as far as consulting or guiding them at a bigger capacity so that they could actually grow. So I went ahead and created Evia. And as I mentioned, we are a growth partner to businesses. So we help businesses fund, innovate, and grow. So for we help them get ready for capital. So for those that are looking to get ready to go get some loans or line of credit at the bank and get the best available rates that are in the industry. I also help with creating websites and the foundation, your logos, but then also digital marketing strategies. So if you think about it, my business is pretty much all about growing and get being partnered up with you so that we can get you to the next level, especially for those that are starting up or scaling your business. So, as I mentioned, serving entrepreneurs for the last 15 years, I do a lot of these different workshops across the country through, in person, but then also virtual as well. So, thank you again, everybody, for joining today. Now, these are some of the topics that we're going to be talking about. First, we're going to go through cash flow basics, why cash flow matters, money in and identifying cash inflows, money out, understanding the cash outflows, forecasting and budgeting strategies for cash flow excellence. And of course, at the end, you will have the opportunity to speak and ask me any type of questions. And if we need to dig deeper, then you will have the opportunity also to schedule an appointment by scanning a QR code. Now, I think it's very important to go through some statistics, right? Because it's not we're just doing a workshop about cash flow and the importance of it, but also for you to be aware as to why this today's workshop is so important. And as you see here, we have some really credible resources here. So we have the first stat is 82% of small businesses fail due to cash flow problems. So businesses often close because they run out of working capital and not customers. So believe it or not, there has been some of my clients and where they are actually not able to continue business, but it's because they don't have the enough money to actually operate. So they may be profitable, but their accounts receivable, meaning that the money that is owed to them is not there. So what ends up happening, you're not able to keep up with your operations, you're not able to keep up with your payroll, your rent, any business expenses, but more importantly, I've seen so many clients not getting the access to capital that they need and be proactive to where it's already too late and now they have $1 million contract that they had to turn away because they didn't set themselves up for success or maybe didn't have the right guidance with their banker. So I did have a logistic company and I had mentioned, you're growing pretty quickly and the money is not coming in. He's like, yeah, some of these customers are slow paying. I don't know what to do with them, but we keep getting business. And I'm like, you know what? You need to get a loan. Right now, you're still in time to be able to get a loan. So client had at the time about $500,000, but you could also imagine with the payroll, expenses, rent, running a manufacturing operations and having to get inventory to be able to do these medical supplies. Well, he had the opportunity to do a government contract. And it was about $1 million. Now, given the money he had in the bank, credit, and everything at the time, because we do have to collect sometimes financials, they were set to actually get and borrow the $1 million. However, they were not proactive enough. And so unfortunately, they had to close and lay a bunch of people off. So let that not be you. Make sure that you're getting the proper guidance. You have Irene Pace as a resource. And of course, now you have myself if you didn't know me from the past. So 80% of business owners say access to funding is a top stressor. Now, again, this is from US Bank, and this is in 2023. They ran this report. They surveyed a bunch of clients, of their clients, and across the country. So 80% of the clients are saying that. Now, access to funding, just because, let's just say PNC Financial or US Bank or Bank of America or whatever bank is out there is not funding you, it doesn't mean that you cannot get funding. It just means they're not the right lender for you. Another reason why today is so important is because if most banks, if you are not cash flowing, meaning that you're not showing the profits and have the cash flow that you need, the money in the bank and coming in at the right time, that becomes a problem because they do ask for an aging report, which shows who owes you money, how long it's taking them. And if you have too many slow pay clients, they may not consider that as part of receivables that you're going to be getting in the future. So that'll not help you get approved. 35% of owners worry about cash flow forecasting. So if this is you, please make sure that you have the right guidance, the right consultants, the right bankers that are guiding you through, because that might not be your strong point. However, as an entrepreneur and as a business owner, you should know where the resources you should go to be able to get the information you need so that this doesn't happen to you. Now, I wanted to start off before we go about the ins and out of your money coming in and out of how your operating cycle works. Okay. Now, this is pretty much if this could be for a retailer, this could be for a manufacturer. Of course, your inventory, you might not hold it as long, or maybe it's instead of inventory, you only have service, or maybe you have both service and inventory business. So first, what happens? You have to go and you have to purchase your goods or services. If you're a service, maybe you're not purchasing it, but it's, you have to pay your staff. Once you purchase your services or your inventory, now you're going to hold this inventory. So very important that you're also doing great inventory management because what ends up happening is if you buy too much inventory, that could also be a problem. If your staff is ordering too much inventory and you're holding this, let's just say for 90, 120 days, that could also become a problem because now you're sitting on product and you're not getting rid of the inventory fast enough. Goods or services sold. So once you sell the product, how long is it going to take you to get paid for on this product? Now you have to think about this, right? If you go to a retail company or you go to, let's just say, H&M or Macy's, what happens? You go in there, you buy a product, you buy some clothes, you pay, and they get paid maybe the next day or so, right? So the sales cycle is pretty quickly. However, the inventory that they're keeping, that's a different story. But that determines how fast they get paid. As soon as they sell something, they get paid in the next couple of hours or days. If you are a manufacturer, distributor, logistic, or a service company, then this could actually be taking you longer. So this could actually take you anywhere from 15 to maybe even 120 days. Some of them, it could be 6 months if you're doing a government contract. Some of these government contracts do take a little bit longer. And so that would be something that you have to take it into account. What does this mean? That if you are not selling your inventory or your service fast enough and they're not paying you in time, then what you need to do is you need to set yourself up for success and be able to have working capital loan or maybe even a line of credit for you to be able to move forward with the business and be able to stay continuing with your operations. Your receipts from customers. So cash is collected from the customer based on agreed payment terms. As I mentioned, that you could have anywhere from immediate to, depending if you're doing government contracts, that could take you a little bit more time. Maybe some of you in here might be working with government contracts. And if you're not, then there is a lot of opportunity out there. So make sure you're following your resources to be able to tap into that. Cash available. Now, this is the money that's available in the bank. Now, we could be rich on your accounts receivables, but if those customers are slow paying or they're not depositing into your account or it's not hitting your account, then you could see how this could become a problem. So that's why it's very, very important that you have an idea of what your forecast looks like. So what did this look like on Q1, Q2, Q3, Q4 of last year? That'll give you a little bit of a forecast, but then also it'll set you up so you can also set yourself up like from last year, I should do a 10% increase. And if you don't see that, then you know that there's some changes either that need to be made or some adjustments that need to be made in your operations. Pay suppliers and repeat. So, paying your suppliers back once you make that money back. So, some of the things that you may want to negotiate with your vendor suppliers might, or people that you have to pay, or companies that you have to pay, is being able to negotiate longer terms. So, what does this mean? You want to delay your payables. Other ways that you can delay your payables is work with your bank. And with your bank, you're able to use maybe a credit card. And with the credit card, depending on when you swipe that card, you have anywhere from 15 to 30 days to be able to pay the bank back. So now you're playing with the bank's money and you're at 0% no interest because you're going to pay that statement right back once that cash becomes available in your bank account. So not only does that help your credit, it helps the relationship with the bank, but it also helps you delay your payables. So being able to not pay them immediately so that you have a little bit of time to be able to make that money back. Now, I know that I went through a lot right now, but this is pretty much what your operating cycle looks like as a whole. And I want to stop right here and see if anybody has any questions before I move forward, because now we're going to get into a little bit deeper of things that we need to look out for. So, any questions? And I'll give you a minute or so to see. Yes, those are scary statistics. So that's why today is so important. And today you're going to learn on how to be proactive and not get into those situations, but then also set up yourself for success. Thank you, Charles or Charlene. My eyes are failing already. All right. So cash flow essentials. So cash flow is the net balance of money moving into your bank account. So there's a difference between being profitable and having cash flow. Cash flow is when the money is coming in, the way that it's flowing in, and that is the goal is for it to keep coming into your bank account. Very important that you, and we'll talk about this later, is that you're also making sure that you are invoicing your clients if you are a service business or making sure that they know that they owe you money. I've had clients and where they come and they're like, "Oh my goodness, like, my cash flow is not great, like I don't have," but then they come in and they have like a stack of invoices that they haven't sent out to their clients. And of course, a lot of it was more paper back in the day, but that's what I would see coming in through the branches of they were not maybe having the proper help to be able to invoice because maybe they're too busy. So those are some other things that you need to look out for of where do I need help in order for my cash flow to continue coming in and making sure that you're doing the right things so that you can get paid. So types of cash flow, operating day to day. So receipts from customers minus payments for the expenses. So this could be sorry, and then investing, which is the cash from selling or purchasing assets, and then financing, cash from loans, investors, or repayments, which I mentioned. Don't be afraid to get loans if it's going to help your business. And if you're not 100% sure of how that's going to help your business, it's very important that you sit with somebody and get the right consulting or your banker that can guide you as to what is this money going to do for you if you are to get this loan? Is it going to help you get that one, not turn away that $1 million contract? Is it going to help you be able to get to the next level? Is it going to help you also maybe hire some more staff so that your cash flow can start coming in? Or maybe you have too many clients and you don't have capacity. Very important that you set yourself up to be able to get the right cash on hand. So money in. So this is the favorite part of all of us should have is when your money comes in. So this is your money that's coming in from your sales revenue, right? So this could be the products or your service that you sell. Also, it could be investing. So from selling equipment or assets and then financing inflows from loans or new capital or grants. So those are some things that where money can come in. Some of it doesn't always have to be from your revenue. It could be from different things that maybe you're selling, so maybe equipment or also new capital coming in from loans or grants. So being able to understand where your sources of money are coming in are very crucial because if they're only coming in from you selling certain things like equipment or getting rid of equipment or coming in just from loans, then obviously this means that you need to increase your sales revenue. And eventually we will go, I did add a sample of a profit and loss. So we'll also kind of go over of what your budget kind of go over what your budget, certain things that you need to look for your budget, or maybe things that you may want to red flag of like maybe we could be saving a little money here and there on certain costs. Money out. So this is not the so favorite part because these are the cash outflows. So this is money when it comes out. So this could be your operating expenses, your inventory, purchases, suppliers, and utilities. Also very important to keep your staff happy and payroll and your benefits. So this could be your wages, taxes, benefits, rent and taxes. So lease, insurance, government obligations, and then of course paying back those loans. So although loans are great to be able to get you to the next level and scale, making sure that you are paying those back and keeping your lenders happy so that in the future, as you grow, you can continue doing so. So being able to control your expenses is very essential, and we'll take a look at shortly what a profit and loss looks like. So that way you could also identify of where all your expenses are going and where you can make some adjustments if needed. Wow, can't really talk today. All right, and as promised, I did promise you a profit and loss statement. So this is just what for a sales revenue of 85,000. And here it pretty much tells you how much money is coming out and how much money is being kept within the business, okay? So when I would sit down with my clients and I would see all of their different expenses, I would see different opportunities as to, whoa, why is this consulting fee so high? Or why is this attorney fee so high? Maybe why is your bank charging you $5,000 a year and so things like that of where we could see a bird's eye view of what needs to change. This particular this particular profit and loss is actually not bad at all. They do have a net profit. What we don't want to see here at the bottom are, oh my goodness, I can't even remember what they're called. They're not quotation marks. Oh my gosh. Anybody want to help me with the chat? But you don't want to see this as a negative number here. In this case, they're still in good shape because they have, there you go. Thank you. I knew you had me. Okay, I love that my audience has my back. Thank you so much, Desiree, David, and Charlene. Asterisk. No, not asterisk. They're parentheses. Wow, I can't believe I couldn't come up with that word. But hey, it happens. I'm still human. But here it is. This particular business does have this particular does have a net profit of 17,000, which means this is great. At the end of the day, they are still showing profit, so that's something positive. However, if they're not collecting fast enough, the profit really doesn't matter at the end of the day because although they're showing profits on paper, it might not be in the account. So that's where you have to be careful and make sure that your QuickBooks or whatever system that you're using for your accounting is actually in line to what it shows on. You want it as close as what you have on your bank account. So your revenue is you're coming in, your cost of goods sold is your direct cost of your product that is costing you for you to obtain it. Your gross profit is your before your overhead. And then your net profit, which you see right here, is after all of your expenses. So that's what you're tracking on a monthly basis. Now, I also added a sample of a balance sheet. And this here is something that the lenders take a look at because it gives them what your assets, liability, and your equity and the actual value, more or less of what the value looks like for the business. Okay. Now, as you see here, it tells us immediately that they have $42,000 in the bank and they're waiting on 18,000, which is not too bad. They do have 22,000 in inventory and they have 35,000 in equipment. So total assets that they have is 117,000. If you take a look here, though, they do owe $55,000 in credit card and loans. So that's where the lender would want to know what type of debt that they have. So that way, one, they could try to refinance it, or two, maybe even save you some money on the interest. So you may be asked, don't be surprised, like, oh, how do you know all this information that I have loans? Your banker will eventually find out, or the underwriter will eventually find out because of reports like this. Very important, and I don't expect everybody to be an expert, but there has been times in where the balance sheet does not balance, meaning that the total assets does not match total liabilities and equity, and that has actually killed a deal in the past. So be very mindful of what your CPA and accountant. Make sure that you're, here and there, just try to see, or even with your banker, be proactive, like, hey, can you just check my balance sheet? Or sometimes they don't fill it out, and that could be a red flag to the lender. So those are just a couple of things that you may want to consider taking a look at when you are also hiring a CPA or an accountant, because some of them do not fill that information out because it's not necessary for the IRS. Yes, definitely, Catherine. So bank fees, credit card interest, and credit card processing fees, those are all hidden costs that can be adjusted. That is absolutely right. And those are some of the things that consultants and bankers will take a look at to see what areas of opportunity we may have to be able to improve your operations efficiency, but then also be able to reduce costs so that you stay profitable. So these are going to be, this right here is going to be one of your best friends because, like I mentioned, the profit and loss will give you the expenses and where everything is going. And so you may want to just keep an open mind of when somebody's trying to call you and save you money, that they may be able to have opportunities for you to save on your operations. Okay, forecasting and cash flow budgeting. So this right here would tell you pretty much how fast you're you're not only getting paid, but then also what your expenses are looking like for your budgeting purposes. So a good way to be able to do this is being able to look at your what your profit and loss is doing and how much money you owe to everyone, right? So this could be your lenders or anybody that you owe money to, your rents and all of that. So very important for you to do this so that way you can kind of have an idea of what your cash flow is looking. So you may want to do that on a quarterly basis. So that way when you're doing this, you say, okay, you know what, right now I'm running behind, or you know what, I have to motivate my clients to be able to pay me. So those are some things that you may want to do. Now, some of the things also that you can do for your slow pay clients is you may want to let them know, hey, you know, if you are able to pay me immediately, you get a 10% discount. I know a lot of my clients have done that in the past. Or if you're able to do it on auto pay, like let's just say that you have something that could be on auto pay, that could be something else where you might be able to offer a discount. But the goal is to be able to get all of your clients to be able to pay you on time so that when you are kind of doing forecasting, it's a little bit better and it's a little bit smoother for you too. So what are you going to want to forecast? That'll be your operating expenses. You want to also forecast your payroll and benefits, any wages, taxes, and any wages, taxes, and benefits that you may have for your staff. Rent and taxes, so this could be lease, insurance, and government obligations. And you got to remember that you have to keep these in mind because some of them may not be due every month. Maybe they're due every 3 months. And so that might be a surprise of like, whoa, why am I missing an additional $10,000, $15,000? And it could be maybe because you didn't take in consideration that your taxes were going to come out. Also, of course, loan repayments, those are something pretty easy to track because usually your payments will not change unless you do have a line of credit or a credit card. But these are some of the things that you may forget. So we want to make sure that you are able to forecast what your expenses are going to be so that you can kind of have an idea where your cash flow is going to look in the next few months. So always looking ahead and being proactive. So strategies for cash flow excellence. So we talked about liquidity and financing. So really important that you are proactive and get ahead of the game. Not only have I had clients lose out on contracts because they were not proactive and didn't strategize efficiently to be able to get the money or build a cash reserve, or maybe even send invoices promptly. All of these things are really crucial for your cash flow to continue to coming in. Because if you are too busy to be able um, to maybe not afford to pay your operations or your inventory that you have to put up front to be able to get these type of contracts or these type of clients, if you are trying to scale up, it's very important that you have the right liquidity in place and financing. And even if you don't have the liquidity, let's just say, meaning cash, you could also maybe have something called a line of credit if your bank offer or lender offers it. And with a line of credit, you're able to use that as cash and also be able to manage your receivables. So as I mentioned, you may have your slow pay clients that maybe are taking 3 to 6 months to pay you back because maybe you are doing government contracts. It's important that you set yourself up for success and don't do it at last minute because I've also had some clients and where they come in and they said, Val, like, I need this money yesterday. And unfortunately, for a lot of these loans, if you're getting a pretty good, decent rate or a decent terms, they take time because sometimes we have to go through SBA or different, type of try to find you the right financing. So you want to give yourself at least 2 to 3 months for you to be able to get these loans. And I don't mean to scare you, but I've been in the industry for over 20 years and I've seen it so many times where the client comes in and they're in desperation needing this loan because they don't want to miss out of on the contract because maybe now their competitor is going to get it if they don't get this money. And I've had clients come in where they borrow the money through an investor and it's a 30-40% interest. So you can't imagine, like, yes, they get the contract, but now it's really, is it really worth it? Because are you really now making money? So you want to make sure that you set yourself up for success. Operations and timing. So being able to negotiate your vendor terms and suppliers. So instead of maybe paying them back in 30 days, hey, can we do 40 days, 60 days? Try to work it out with them because also they may be reporting you to their credit bureau. So you just want to make sure that you are able to manage that appropriately. Monitor inventory closely to avoid tying up cash. So as I mentioned earlier, we went through the operating cycle. And if you are not careful and you order too much inventory, that could also mess up with your operations. Just the same way as if you don't order enough. Now you have to order it and maybe it's coming from overseas. So all of those things could actually hinder your cash flow of it coming in a timely manner. Also, diversify revenue streams and adjust timing of inflows and outflows. So, what does this mean? Maybe have multiple services or have a combination of having inventory and a service. And so that way, when let's just say, I know that a lot of manufacturers or distributors were having some issues out there, being able to have other revenues and streams so that you don't have to go through these hard times. Let's see here. I have a couple of statements and it looks like questions. So let me just go through them real quick. It says the faster you need the money equal the lender charges higher interest rates or other terms that are disadvantage to your business. And that's absolutely correct. And thank you, Catherine, for bringing that up because you got to remember they are running a business as well. And it's just like, okay, we're going to give you a higher interest rate because this is a little bit of a high risk. So now they're giving you the money maybe in 2 to 3 days, but now they're taking advantage of putting you on a product where they're going through an investor, maybe versus a bank or a lender, a traditional lender. And so now, yes, that is correct. You are now paying a higher interest because they're giving it to you quickly and they're going through other means to be able to get you that money. Do you know which is easier to obtain if the loan credit amount is the same, line of credit with collateral, term loan with collateral? So Damien, that's actually a very great question. And the way that I'm understanding it is it better to get a loan or a line of credit? Am I understanding that correctly? Okay, perfect. Now, if you are going to get a loan, you have to make sure that you are getting something that is either one, it's going to be a long-term working capital. What does this mean? This means that you're going to hire some staff. You're going to use it for payroll. You're going to use it for a large amount of inventory. So I know during like the holidays, the distributors and manufacturers buy more inventory. So because of that, then they would go ahead and get a loan. Or if you're buying a fixed asset, so you're buying some equipment, you're buying a commercial piece of property, if you're buying, I think I already said equipment, or anything else that is an asset, then at that point, what you would do is you would still get a loan. Now, for our manufacturers that are on the line today, or also distributors or any type of service business, you may want to consider a line of credit because that way you can kind of pull cash in and put it back and it's revolving. So you can continue using the same line of credit. Now, why would you want a line of credit versus a loan? Well, when it comes to a line of credit, what happens is as soon as you touch it, the interest starts charging. So what does this mean? This is short-term financing. Now, if it's something that it's going to take you a while to pay back, then you're going to want to do a loan. And the reason you don't want to use a line of credit is because a line of credit, you're never going to pay that back. Let's just say that you want to pay it in 5 years. It doesn't work that way. Whereas a loan will tell you, okay, it's going to be 60 months, 36 months for you to pay that debt off. You know, at month number 36 or month number 60, then you already know that that debt is gone. With a line of credit, it keeps revolving so you can continue using it for your business. Great question. Thank you for bringing that up. Which one is easier? I would say a term loan is easier because typically they will ask for less information, but then also this always depends on what product you're using, if you're going through SBA or you're not going through SBA. Line of credit, they are considered a little bit more higher risk, and I really wish that they would do a whole workshop on just line of credits when you're getting one, because if you don't use it appropriately. So I've had so many clients come in and they're like, "Oh my gosh, Valerie, like I've been paying this minimum payment and it's not going down." It's not going down because you're using it for the wrong product. Okay, so if you're using it to go a line of credit to go get equipment, it's going to get you into financial trouble because of the way that interest is charged. So that is considered for short-term financing. I hope that answers the question. Great question. It's funny, I just made a video for Instagram recently of you being able to get a startup loan. But yes, a startup loan is funded based with good personal credit along with, money in the bank. If you are trying to start up a business is doing a startup loan, for the most part, banks will not finance that. So you typically have to go through an alternative financing, which would be a CDFI. And so that is still doable. It just obviously it takes a little bit more. And actually, my company actually helps with the doing the projections and business plan if needed. And but we give you more of the, white glove service versus there is also nonprofits out there that can actually help you with that. But we sit down with the client and then we do it on your behalf. So the answer is yes, they do go through personal credit heavily, but they also take a look as if you have an income already. So if you're trying to start a business, I highly recommend that when you get your financing, you get it while you're still employed. Because once you're not employed and you don't have steady income coming in, it's going to be harder for you to get financing. Great question, Lawrence. Thank you for bringing that up. Can your team help my business with looking into options for a line of credit? I'm a wholesaler distributor and have great AR turnaround with my current clients, and I need help putting together my package for review. Absolutely. I believe, I don't know. I mean, do you also do packaging there at Pace?
Uh, no.
Okay. So yes, the answer is yes, we can help you with loan packaging, reviewing it and seeing what lender is going to be the best. Pace would probably, do you have line of credit, Irene?
Yes, we do.
Okay, so Pace might be also an option that we might take a look at, but yes, absolutely. And at the end, I will put a QR code in where you could actually schedule an appointment, and then myself or one of my team members will go ahead and help you. Great questions. So just Verde Valley REO will make loans for startups. Okay, so Verde Valley REO. I don't think I've heard of them. I'm gonna write that down because it's always good to have resources for my clients. Awesome. Great questions. Thank you so much for that. All right, so let's continue. Oh, actually, we're done. Well, conclusion and next steps. So being able to understand the difference between your cash flow and profit. So as I mentioned earlier, cash flow does not mean profit. Profit, yes, that looks great on paper, but is that money in your bank account? So we talked about the operating cycle earlier and being able to be careful with the inventory that you're ordering and how long it's taking you for you to be able to get that money in after you buy inventory or your service. And then apply today one strategy today, which is either reserve cash, sit with your banker or consultant. You have two consultants here on the line that are able to help you optimize collections. So if you have those slow pay right now, what are you going to do to motivate them? Are you going to have somebody give them a call? Are you going to send them a link? Hey, you can pay me through credit card. Maybe you don't accept credit card. That could be another option, or also manage inventory. So try to apply at least one strategy today. And I would highly, highly recommend if you are not meeting with your banker or your consultant, I would at least do that on a quarterly basis If you're a bigger company, you should be meeting and strategizing at the beginning of the year and almost on a monthly basis. Talk to them because they may have certain products that might come out or different type of offers that maybe you're going to wait until the end of the year to buy equipment, but maybe it's better for you to do it now because interest rates. So you want to have that relationship with your banker. So very, very important. Now I'm going to go ahead and take any additional questions. We had some really great engagement. I love it. So I know that I'm going to put this as one of my favorites because I did get a lot of engagement today, which I love. And you also helped me with parentheses, so thank you. But on here, I'm going to, this is a QR code to my Calendly, so you could actually scan the QR code and you can schedule an appointment with me or my team, and then we'll get together and strategize on how we might be able to help you, give the guidance that you need, and go from there and put a plan together depending on what you're looking for. Thank you. Thank you, Uriel. Uriel, I gotta give you a call. Thanks for joining. Uriel is also a consultant, I believe, right? All right. Well, on here, I'd love to keep in touch. So I am on LinkedIn. We are about to start a podcast in the next couple of weeks. Thank you, Odiel. That's very, very nice. Thank you, everyone. But yes, I would like to keep in touch. So please scan one of the QR codes. We are going to be starting a podcast and where we're going to end up bringing different subject matter experts, such as business attorneys, to make sure that we're protecting your business. We're also going to be bringing in CDFIs for alternative financing, insurance agents that can give you the education on that. So it's going to be a very educational podcast and where you get the information from subject matter experts or empowering stories. So we're really excited about that launch. And then also I have my Instagram here. But Irene, I'm going to send it over to you. Thank you again for your partnership and the opportunity to present to your
Oh,
constituents.
of
Thank you,
course.
everyone, and hopefully we can get together soon.
Okay, thank you for joining us. See you next time. Bye.
Thank you, Irene.